Good morning. So we are going to start MCQ Bank for Management Accounting. Let's start with the first question. So in this question, we have been provided with the information as follows. Budgeted inspection cost is given, which is 2000 rupees. Budgeted production, it is given 10,000 units. Budgeted units per batch, it is given 1000 units. So budget number of batches will be how much? 10,000 units divided by 1000 units, which will be 10 numbers. They have also given actual inspection cost comes around to rupees 1760 and actual production happened 9000 units. So with this information also, I can also find out actual batches which is taken for production, which is 11 batches. Now, what is asked in the question? They are asking us to find out cost per batch under ABC costing system. So budgeted inspection cost which is given is 2000 and budgeted batches which is given is 10 numbers which we have computed little earlier. So budgeted cost per batch will be how much? It will be rupees 200. So correct answer is option B, rupees 200. Moving on to the second MCQ. In this question, they are given us the company manufactures two products B and D and estimated overhead is 5,50,000 rupees. Expected activity for manufacturing this output is expected to be 2000 parts and budgeted cost per part we have calculated, which is 5,50,000 divided by 2000, which will be rupees 275. Now actual parts required, which is given the question, is 1200. Now what is asked in the question? They are asking us to find out amount of overhead which is allocated to one of the product, which is product D only. So for that, 1200 actual parts required into budgeted cost per part will give me total cost, which is 3,30,000. So option number C is the correct answer. Next MCQ. So there is a company which manufactures three products A, B and C. Actual overhead which they have incurred is rupees 73,000. Production overhead they have given specifically for each product. A it is 10, B is 20 and C it is 9. So this is production run which has been given. Now what is being asked in the question is to find out inspection cost of only product B itself. For that, 73,000 actual overhead divided by production run in total. How we have computed production run in total? All the production runs of A, B and C has been taken into consideration. So it will come around to 39. So 73,000 divided by 39 will give me for one production run what will be the overhead, and then for product B we have made 20 runs. So the share of cost overheads of production run for product B will be 37,495. In this, there are no correct option. However, the closest option is option B, so we will take it as option B. Moving ahead to the next question. Now, it's a detailed question. I have summarized the chart from the details from there. Now, estimated cost is rupees 1 lakh and estimated purchase orders which is required to obtain the raw material, it is 2000 numbers. Now budgeted period, the period for which this estimation has taken place, it is 14 weeks and actual cost it is rupees 9,000 and actual purchase order is only 200. Now what they are asking is what is the over recovery of the cost if at all it is there in this 4 weeks period. So though the 14 weeks budget was there, but what is your opinion with respect to the 4-week period, whether there is under absorption or over absorption? They are giving hint in the question itself over recovery by saying over recovery. So see here, 1 lakh budgeted cost divided by budgeted orders give me budgeted cost per order, which will be 10,000 divided by 2,000 into actual purchase order. I will get what? My absorbed overhead, which is how much? 10,000 rupees. Now actual incurred is 9,000 and budget is 10,000 for 4 weeks. So effectively, what is the difference? That is 1,000. So the 1,000 is over recovery. Why it is said? Though I have incurred 9,000, but in the product I have absorbed 10,000. So correct option is option D. Going further, in the next question, the information is the company is manufacturing a product AX and output is how many units it has been produced? 500 units, and material related costs which are incurred are ordering cost, holding cost which is 4,500, 2,500, totaling to 6,500, Number of material orders, material number of times the material has been ordered is 35 times, or I can say 35 orders, and material movements and take 20 times. Now, there are also other information which is given the question like labor cost and other cost. However, it is not relevant for us because in this question, what is being asked is they are asking us to find out total material cost under ABC costing. So only material related cost has to be taken into consideration. So in this case, it will be 1,50,000, which is your material cost, manufacturing material cost, which is given the question, plus 4,500 plus 2,500, which we have discussed for ordering cost and handling cost. Total comes to 1,57,000. So the correct option is option number C, 1,57,000. Next MCQ. In this MCQ, they have given us margin of safety. They are asking us to find out margin of safety. Provided information is profit, which is 15,000, and the PV ratio is 40%. So we know the margin of safety formula is profit divided by PV ratio. So in this case, 15,000 is the profit, 40% is the PV ratio. Straight away, I can find out the answer, which is 37,500. So option A is the correct answer. Moving ahead to the next MCQ. Now, in this MCQ, they are asking us to find out margin of safety, and the information given is sales is 20,000 units, actual sales is 20,000 units, and break-even point is 15,000 units. We also know that margin of safety has another formula, that is actual sales minus break-even sales. Applying that, now actual sales 20,000 minus break-even sales 15,000 units, the difference is 5,000 units. So our answer is option B, which is 5,000 units. Moving on to the next MCQ. They are asking us to find out the sales, and the information which they are given is current sales, I can say it is 50,000, and variable cost it is 30,000. So I can find out my contribution, which happens to be 50,000 minus 30,000, 20,000. Also they have given us fixed cost, which is 10,000, and I can straight away compute what is my current profit, which will be there is 10,000, which is nothing but contribution 20,000 minus 10,000. So the balance will be also 10,000. Now they are mentioned that the company expects the profit or desired profit of the company is 5,000. So the question is, to earn the desired profit of 5,000, what should be the sales? So here we need to apply the formula fixed cost plus desired profit divided by PV ratio. Now fixed cost is 10,000, desired profit is 5,000. PV ratio we need to compute, which is 40%. How we have computed? Contribution by sales into 100 is the PV ratio. So 20,000 divided by 50,000 into 100 allows me to get the 40% is the answer. And then 15,000 divided by 40% allows me to find out the sales, which happens to be 37,500. This is your option number D. Moving further, they are asking us to find out the sales value in rupees to earn a desired profit of 5,000. Now, given information is fixed cost is 30,000, desired profit is 15,000, and the PV ratio is also 30% is given. Now, again, we will apply the same formula, fixed cost plus desired profit divided by PV ratio, which is 30,000 plus 15,000 divided by 30%. It will be further simplified, 45,000 divided by 30% to get an answer of rupees 1,50,000. So correct answer is option A, 1,50,000. Moving on to the next MCQ, they are asking us to find out the sales in rupees to earn the profit of rupees 1. Please note this is an important question because you can get stuck. So it may come for the exam. It's a little quality question. Now the information which is given is fixed cost is 10,000. Selling price per unit is given 20, variable cost per unit is given 15. So I can compute my contribution, which comes to 5 rupees. Then profit per unit also it is given is rupees 1. Now here we need to find out units sold. This is the catch. This is where we will get stuck. So we need to understand that unless I find out my number of units, I cannot proceed. So how to calculate units sold? We also know that contribution is equal to fixed cost plus profit. So another way to write contribution is contribution minus profit is equal to fixed cost. If it is so, then I can write rupees 5 minus rupees 1 is equal to rupees 4. Now, fixed cost, once I find out my fixed cost per unit is rupees 4, the total fixed cost is given, which is 10,000. So divided by fixed cost per unit allows me to calculate number of units. So 10,000 divided by 4 gives me 2,500 units. Now 2,500 units into rupees 20 selling price allows me to get the sales value. So your answer is rupees 50,000, which is option number B. Next MCQ, they are asking us to find out the sales in units. For that, they have given us the information: fixed cost 15,000, desired profit is 5,000, selling price is 20 per unit, variable cost is 16 per unit. So I can calculate my contribution, which is 20 minus 16, which is 4. So they are asking us to find out the profit. They are asking us to find out the sales in units to earn a desired profit of 5,000. Now let's see the formula. We will be applying fixed cost plus desired profit divided by contribution per unit, which is 15,000 plus 5,000 divided by 4. So simplifying it, 20,000 by 4, the answer will be 5,000 units. Now in this MCQ of the institute, there is certain mistakes are there in some places. Here in this, they have mentioned rupees 5,000 units under option A. So actually there is a typing error, and also in option B you can see it is rupees 5,000. So the correct answer is 5,000 units, believing that there is a typing error in writing rupees there. Okay, going further, they are asking us to find what is the sales unit, what will be the sales unit uh, from the given data. Now see, fixed cost is given 50,000, contribution per unit given is 60 rupees, and desired profit is given is rupees 10. Now here again, computation of units sold, we need to do the contribution minus profit is equal to fixed cost. This problem is again the similar line to the last one. So 60 minus 10 is equal to 50. Fixed cost divided by fixed cost per unit, which is 50,000 divided by 50. I will get 1,000 units. So the correct answer here will be option C. Again, the typo error in the MCQ question bank of the institute. So the option is C. Next, moving further to the next MCQ, they are asking us to find out the break-even point with the information given, that is unit produced. It is actually again a typing error has happened, that it is 10,000 units. They have mentioned rupees 10,000. Fixed cost it is given is 40,000. Selling price per unit given is 50. Variable cost given is 30. So I can calculate my contribution, which happens to be 20, which is the balance figure of 50 minus 30. Now they are asking us to find out the breaking point both in units as well as in value. So the break-even point in units, the formula is fixed cost divided by contribution per unit. So 40,000 divided by 20. So the answer is 2,000 units with respect to units. In terms of value, it is very simple. 2,000 into just selling price, which is 50. I will get my sales value of rupees 4 lakh. So here there is again a mistake in the question. Option C is the correct answer. We can find it out with the sales value which we have arrived at. However, the options, that is rupees 20, rupees 40, rupees 50, everything is in mistake. I think there is a typing error again. Okay, moving to the next MCQ, they are asking us to find out the break-even point. They have given us the sales value is 1 lakh, variable cost is 50,000, and the profit is 20,000. And this break-even point, they are asking us to find out in value. So I can straight away find out my contribution because sales and variable cost is given. So contribution will be 1 lakh minus 50,000. The balance will be also 50,000. Profit is given 20,000. So contribution minus profit, I can calculate my fixed cost, which happens to be 30,000. Now the break-even point in formula for calculating in rupee value is fixed cost divided by PV ratio. So here fixed cost is 30,000. PV ratio we need to compute. PV ratio, one of the formula is contribution by sales into 100. Contribution already we have computed, which is 50,000 divided by 1 lakh into 100. So I get my break-even point in value, which is 60,000. So the correct answer is option A, 60,000. Moving on to the next MCQ. Now here there is a typing error which I have corrected in this MCQ. They are intending to convey it is a planned sales of 1 lakh units. Selling price is rupees 12. Fixed cost is 2 lakh 80,000. Desired profit given is 2 lakh. They are asking us to find out the variable cost. Now contribution, we know the contribution is equal to fixed cost plus desired profit, which is 2 lakh 80,000 plus 2 lakh. So it will be 4 lakh 80,000. We also know that total sales will be planned units into selling price, which is given the question as 1 lakh units into rupees 12. So it will be 12 lakh. So sales minus variable cost is contribution, means I can also find out sales minus contribution will be my variable cost. So which will be 12 lakh minus 4 lakh 80,000, which is 7 lakh 20,000. So the correct option is option B. Moving further, in this is another important question. So please mark it as important. Small question, but it is important. Net profit ratio is given 12%. Breaking point given, BP is given in percentage, which is actual total, which is 40% on your total sales. They are asking us to find out the PV ratio. We know the break-even sales is equal to actual sales into 40%. In this case, then margin of safety will be actual sales minus 100 percentage minus 40 percentage. Please understand, my actual sales can be, I can break down into two, that is break even sales as well as MOS sales. I can say margin of safety sales. If 100 is my actual sales and 40 is my break even sales, so remaining 60 will be my margin of safety sales. So it will be 60 percentage. So PV ratio I can compute is 12 percentage divided by 60 percentage. So your answer is 20 percentage. This is your option D.